All right, yeah, here we go. This is Crypto 101, education number one. Thank you everyone for coming today. Um, I know some people that requested this definitely want some more basic information. We can definitely, I'll go over that really quickly. Just for those guys who are new into cryptos, if you have no idea how to buy them or where to buy them, that kind of thing. Let me share my screen here. All right. So if you've never bought a crypto before and you want to buy some, or you're looking to buy some, as far as I know, this is one of the only places you can buy it in the U.S. in terms of exchanging dollars for cryptos. Coinbase.com. Go ahead and log in. And I do recommend you two-factor authorize everything you do with cryptos. It's just a form of security. As we all seen, things can get hacked. You want to have these things double verified. So this, I have this send me a text message to my phone anytime someone logs in with my email password. It's never happened so far that it wasn't me, but you know, it's just a good double step of security. And yeah, here's a Coinbase platform. I'm pretty sure most of you guys are familiar with this. This is where you exchange US dollars for cryptocurrencies. So on Coinbase right now, you can currently buy Bitcoin, Bitcoin Cash, Ethereum, and Litecoin. Okay, Bitstamp, sweet. Hey, I didn't know that. I'll have to check that out. I've also heard of, there's another one called Uphold I just signed up for. I'm not sure if you can change US dollars for cryptos on there yet, but I do believe it's another exchange. I just checked it out. I found it out from the crypto guys, the trade house guys on their IML TV. Those guys, by the way, if you're looking for more crypto education, those guys are awesome. They do a session every day at 11 a.m. And these guys, yeah, these guys know what they're talking about. There's some sweet information on there. They're breaking down the charts, they're breaking down news, stuff like that. Yeah, so check out Uphold too is another way to buy cryptocurrencies. Then we'll get next to Binance. This is the exchange where you buy altcoins. So you have to buy cryptos on Coinbase first, then you'd send them to your exchange here on Binance. And once you're on Binance here, this is where you can see all the different coins, and this is where you use your Bitcoin. All these are usually paired with Bitcoin. Some of them they're starting to offer Ethereum pairs too. And yeah, this is where you buy stuff. Recent development I've been hearing in the crypto market. So right now, as you guys know, a lot of these coins will go into CoinMarketCap here. And you can see that most of these charts look the same. And that's because they're all driven essentially by Bitcoin. Later, Jacob. They're all driven by Bitcoin. And so Bitcoin drives the price of pretty much the entire market at this point. What I've been hearing, rumors are on some of these exchanges, is they are going to start, hopefully very soon, offering Ethereum like pairs. And they do already offer, let's say like NEO versus Ethereum. You can go ahead and look on Binance, see what they offer at this point. The NEO is only paired with Bitcoin. I want to see if there's anything paired with. Apparently not. Oh, here we go. Yeah, Ethereum markets. So you are starting to see some marketplaces, like Binance is one, that offers pairings that aren't just Bitcoin markets. But you can see the 24-hour volume is pretty much nothing compared to that of Bitcoins. But what I was saying before is what the rumor on the street is, I've been hearing there's going to be more exchanges where you can trade in currency straight US dollars for Ethereum. Stellar Luna is another one I heard, Ripple. So instead of always going to Coinbase or Bitfinex or Uphold and exchanging your US dollars for Bitcoin, Litecoin, or Ethereum, there's going to be more places where you can exchange US dollars straight for Ethereum, straight for Ripple, straight for NEO, straight for Stellar, more of these altcoins. And I think once we start to see that, that's when we're going to start to see these charts looking a little bit different. As you can all see, they follow Bitcoin for the most sense. And we can go ahead and look at the Bitcoin dominance. I don't remember where that is. Oh, here it is. And this for me is personally what I'm looking for before I'm really bullish on this market again. I do think Bitcoin has its limitations, and especially since we haven't seen Lightning Network or SegWit be fully implemented and the scalability issues still remain on Bitcoin. That's a whole nother topic too. I'd love to do an episode just on SegWit and Lightning to explain how those are working and how they're trying to make the Bitcoin network transact faster. But essentially, those are just scaling implementations that are going on right now on Bitcoin. And at this moment, they're not quite fully live yet. Lightning Network, I believe, Lightning Network is live, but I want to only say I heard 15% of the network is on Lightning, so that's still being implemented. And what Lightning is basically it's for transactions to occur, they're going to occur actually not on the actual blockchain, and so that would increase the speed of transaction. Let's say I want to transact currency between us, and that would occur on a Lightning block, and then that Lightning block, once that transaction history, once like our business is done, that's when the transaction would actually be broadcasted to the blockchain. There are some pros and cons to this, obviously, and SegWit's another adoption, like another implementation of basically the same idea of scaling this better. And that's actually how you had Bitcoin Cash was created. Bitcoin Cash was created based on a disagreement of not wanting to implement SegWit. And so the guys took the Bitcoin protocol and they forked it, which is how you create a new currency. Basically, you copy and paste the software. Let's say Bitcoin is making a change. You don't want to make that change. You can keep the original software, create an entirely new currency, and that is Bitcoin Cash, based on disagreements of that scalability. So yeah, going back to what I was saying about market dominance and my personal opinions of it, I'm really looking for this market dominance to calm down. As we can see right here, when market dominance, Bitcoin shrank and came down to the lowest it was. Actually, no, it was lower here. But when Bitcoin came down 37%, if most of you know, that was a great bull run for altcoins. Altcoins really had a strong January. And this is, go ahead and correlate with the price. No, I'm looking at the wrong chart. I'm sorry, guys. Right here. This is what I'm talking about. Bitcoin dominance all-time high, middle of December. This is the bull run last year that most of us were aware of. Most of us, that's when I personally got into this market. Bring this chart up a little better here. So as I was saying, when Bitcoin dominance goes down, that is traditionally when we have seen the altcoin market rise. That is when we saw altcoins making their all-time highs on this crash down, all the way down to 33% here. So since that, we've seen Bitcoin come back up into the 40% range, and I still think this is too high. Like I generally believe this can come back down to 30%, definitely 25, 20%. I mean, that point you're looking like a lot more even of a market, so to say. You're not going to see every chart be looking exactly like Bitcoin's when that happens. This is when I think Ethereum's going to have I think possibly it could happen this year that you could see Ethereum take the majority of market share. It almost happened last summer, very close. Not as close this winter in the last Bitcoin crash, but that way I think that's just generally going to be a lot healthier for this market when the entire market isn't driven off of just one coin of Bitcoin, you know. That's just generally, that should be a lot better for the entire market as a whole. So yeah. Also want to show you guys my sources. Where do I get my sentimental analysis? Coindesk.com right here. Great website. This is basically sentimental analysis, fundamental news. You get all that right here. Another one. This one's pretty popular. I think most guys know about this. Cointelegraph. This is a great one too. A lot of times you'll see the same stories on these websites, but yeah, just showing you guys what I use. And then the last one here, which I just found recently, it's pretty awesome. Crypto Slate. I find that they have a lot of articles on here that aren't on those other two websites. So generally, if I'm not actually on the charts, not doing whatever, this is where I'm at. I'm reading articles about this stuff. Just try to keep tabs on this industry, which we all know can be pretty daunting and pretty challenging. There's a lot of things going on, but things that jump out to me are stuff like this, Samsung. Anytime you see major companies implementing blockchain, and for a general sense, I think the news is still bullish, and it has been bullish for quite a while. it's not quite reflected in the market yet, because right now this market is still pretty much driven on speculation. We don't see these cryptocurrencies being used, so to say, like real world applications of them. So at this point, like the value, trying to value a project that you don't actually see working and doesn't really have a working product. I mean, we know Bitcoin is working. You can buy Bitcoins. We know apps are being built on Ethereum, but have you used one of these apps before in business? Most of these products are still simply an idea. They're in a white paper. So this market is still a speculation-driven market, which leads to me into my opinion of I still think we're bearish. I still think we have ways to come down. We saw a lot of accumulation here. Let me pull up the chart. I still think we have room to come down for the entire market as a whole. Something to look out for in the future, the G20 summit is going to be held this July. They've had a pre-meeting for cryptocurrencies, and basically they had said, yeah, we need to figure out regulation for these cryptocurrencies. That's a worldwide summit, and all the leaders of the world will be at that. They're looking to have that summit, I believe, July. I don't want to say the date. I'm not quite sure. I want to say July 20th. So that seems to me to be a monumental day thing to look forward in this industry, in this space, because basically right now we see a lot of news of these regulations of these governments, some like India, China, even banning cryptocurrencies. Not necessarily banning either, because they're simply just outlawing ICOs, or there's a lot of technicalities to this, and there hasn't quite been an overall consensus reached on how to regulate these cryptocurrencies yet. So I think G20 will be one of the major first steps in basically the global, how the globe wants to regulate these cryptocurrencies. Yeah, that's happening in July. So up until that point, investors are still going to be sitting here wondering, what is Bitcoin? Is it a commodity? Is it an asset? In the United States, that pretty much depends on what regulatory agency you're looking for or you're asking. I had a tweet the other day. Let me see if I can find it here while I'm talking about this. That basically is like telling you, okay, what's Bitcoin? Well, the CFTC says it's one thing. The IRS says it's another thing. The IRS wants to tax this on everything. Yeah, I'm recording this, Briggs. So yeah, it really depends on what government agency you ask right now on what Bitcoin actually is, and that's going to be a great influence on the price. Is this an asset? Is this what are the other options? I lost my train of thought. Sorry, guys. Looking for this tweet. But yeah, back to my bias on Bitcoin. As you can see here, this is the monthly. April, we're seeing a nice little bullish pullback here. Nothing too crazy. We had a very bullish March, or a very bearish March. We're having a little bit of pullback, but we're only halfway through this month, so this candle could come down to be even doji, and it can even go bearish. We all saw that 1,000 price push the other week. This was last week right here. But as you guys can see, very basic chart structure here. We are still creating lower lows. Whoops. Lower lows, lower highs, lower lows, lower highs, lower lows. And to me, for this to be bullish again, I've marked it right here on my chart, 11,752. I would love to see that. Until price breaks that structure, I am going to be bearish. 10,000 is also a huge level. But that is the structure for me that I would want to see to be broken to confirm the bullish movement before we're bullish again on Bitcoin. As you can see here, 7,000 proved to be a huge area of accumulation to support right here. That was on here. This is what we saw for the beginning of April, and we ranged here within about $1,000 here, which for Bitcoin is a small little range. But we ranged here, and there's a lot of buy orders here. I found that I've been looking at the order book here. This is another great resource. I'll post it in the chat if you guys want to see. Bitfinex order book. Right here, you can actually see all the open orders on Bitcoin. This is basically a cheat book. These are cheat codes. If this existed for Forex, it'd be game over. This is the support and resistance. You can actively see who has orders out for what prices. Right here on the left is our bids. Right here on the right is our asks. So right now, just going through. So how I kind of look at this thing, I'll scroll through it. I'm looking at both sides pretty much as I'm scrolling through. And what I'm looking for is big fat numbers. Like this one's there, but I usually look for 3-digit numbers. That to me signifies significance. As you can see, there's not too much right here. Haven't quite got it. We broke through 8,000 yesterday. This, as you can tell, could take some time. This is as tedious as you want to make it. I like to go through here and just look, especially if I'm going to try to day trade it. Here we go. 108 Bitcoin, another 40, another 45. So we know 200 Bitcoin are going to be bought when price hits 7,750. But just to begin, this is an example. That'd be a price I might want to map out on my chart, as a strong resistance. This is more so if you're looking like trying to trade in the 1 hour, the 2 hour, the day, or the 4 hour. As you can see, those that were booked before you get to the major price points is quite a long ways. Let's see if I can find something good here. But here we go, 177 and 76. So you'll start to see that a lot of these big orders are placed on the major levels. And as I was watching it back those couple of weeks ago, there were a lot of buy orders right around in that 6,000 range, and especially at that 6,500 range. You go back to the daily. 6,500 proved to be a very strong support resistance, and there was a lot of buy orders here that were filled, and that's to me why this price jumped back up here. Am I bullish on it? Am I going like all in on cryptos at this point? No. I still believe we have room to come down. So this support has held, but to me, nothing fundamentally has changed in this market yet. The news is still the same. Nothing crazy has happened. You haven't seen project go to zero or anything like that. There's no reason to change the bearish sentiment that I have. There aren't any buy signals at this point. Yes, this was a nice pullback and a nice $1,000 move, but as you see, like I was showing you on the weekly, and I have it mapped out here, honestly, I think this 5,000 right here is going to prove to be a huge point for Bitcoin. My personal bias is that Bitcoin will hit this price sometime within the next couple of months. Like I said, my prediction is by about June, July, we're sitting down here in this market, in this range as price continues bearish. Who knows? I could be wrong. And then the G20 summit will give us more clarification on how we're going to regulate Bitcoin, how these cryptocurrencies are going to be regulated. I think there is when you can start to see this market turn around. But honestly, that is pure speculation, is my opinion. And the true bottom, I think, what the furthest we could go is right here. I have it mapped out too, is 36 islands, so you can see this other support. So that's my technical and personal bias on Bitcoin and the market as a whole. So as we stand right now, Bitcoin does drive the market. So in terms of investing in other currencies, Ripple, Ethereum, look at these charts. They're pretty much the same. We do have structure break, especially on the weekly here on Ethereum. And I personally am a little more bearish on Ethereum though, in comparison with Bitcoin. As you can see right here, Ethereum essentially hit the bottom of its support and resistance right here. If Ethereum were to go down more, you're looking at probably this support and resistance right here at 250. But for all the development Ethereum's had, the crazy year that Ethereum's had, all the ICOs that have been launched on Ethereum, all the ERC20 tokens you see, I have a lot of those here on you'll notice on my catalog. A lot of these tokens are ERC20s. So in my opinion, this could be the year we see Ethereum take over Bitcoin, take over the market dominance. At this point, I'm still worried. Like I said, I don't see the bullish reversal yet. I do see it more possible and more likely for Ethereum than Bitcoin, especially after this nice pullback and this bouncing off this pretty strong support right here. And like I said, you could do the same thing with Ethereum. You can go look it up on Bitfinex. So yeah, that's pretty much all I have on just my market overview, the resources I use kind of thing. And by the way, this crypto catalog, it's been something I've been developing, but if anyone wants to like work on it, look on it, totally more than welcome. Most of this information is available on the internet. It's not hard to find. And the idea is just to make this a wiki of places where we can all like figure out what these cryptos are. I've just created a legend here, basically explaining every category, how to fill it out. You know, like what are you trying to answer in this category? And this is what I've also started. Technical abbreviations and terms explained. This I think is going to be pretty valuable, in a sense of the start thing that most people don't really know about crypto is like what's a hard fork, what's a DEX, distributed ledger technology abbreviations, but then these consensus protocols like proof of work, proof of stake, delegated proof of stake, proof of performance, DAG. This is IOTAs. This is this is Tango, what they call it. So I think in the next Crypto 101 episode, I'd love to get more into these kind of things and give you guys really that scaling solutions too. So this is where I want to explain all those technical things. You know, I'd love to get into that in another call with you guys, especially the proof of work versus proof of stake. So very basically, if you don't know, proof of work is how Bitcoin is run. That is the traditional sense of how blockchain is run. So a blockchain, as we all know, is a distributed ledger. And this is a ledger that's on every single person's computer that uses this network. So let's say I want to send a transaction to one of you guys and you guys want to receive it. Generally, why the Bitcoin so awesome is why the blockchain so awesome is it removes the trust generally given to a third party to confirm that kind of transaction. So in the world that we stands today, if I want to send you money, we're going to have to send this through a bank because otherwise, like the bank has to verify that I, one, have the money, that two, you've received the money, and they facilitate basically as the trust. So the whole idea of the blockchain is removing trust from these, like, it's coding trust, basically. That's the best way I can describe it. We're establishing trust between business protocols through code, and all this is verified by the blockchain. So it's all these transactions are transparent and posted on a blockchain, which everyone can see. And once these transactions are posted, there needs to be someone who verifies these transactions. And that's how you get into the consensus and the network mechanics and the protocol of how these networks work. The original consensus protocol was proof of work, which is what Bitcoin runs on. A lot of them run on proof of work still. Ethereum is also proof of work. So how proof of work works is there are computers racing to do a hashing algorithm, and the winner is mined with a new coin. So all these computers are trying to do are race to be the one that verifies the transaction. Verifying the transaction is a very simple process. You just check if it was work, if it was good, both sides accept, yep, seal approved. But obviously, every single computer would want to verify the same transaction. So in order for that transaction to be written to the blockchain, to be stamped as a seal of approval, to be legit written in the blockchain. Because once it's written in the blockchain, it's sealed and it cannot be undone. That's the security of the blockchain, is you're writing one transaction, or there's a bunch of transactions in a block, and you're writing them all in set in stone. And then once those transactions are verified and that block is created, you stack it. And then once you do that process again, stack another block, and another one, and another one, and another one. And so that's called the blockchain. So in proof of work, there are computers racing to be the ones to write this block. And once they are, and basically they have to do that by proving they're working and doing these hashing algorithms. Right now, it's very hard to mine Bitcoin by yourself, but back in the day, you could have, when first Bitcoin ran around, you could have fired up your computer and been one of the best nodes on the network, and you could have probably minted yourself a nice little stash of Bitcoin. At this point, the hashing power of the entire network is at an insane level because of all these companies who are mining Bitcoins, who have farms basically set up to do this. And yeah, so the raw computing power essentially determines how likely you are to mine a Bitcoin. And once you mine a Bitcoin, obviously that's what you get for computing, to like using your computing power to secure this network. That is the security and the power of these networks, is the computers running them. Proof of stake is a little bit different. It's a lot different, actually. It's essentially one of the first things they saw as a hindrance to proof of work is it was not very scalable. And in that sense, like the blocks are small, or the blocks are, in order to verify that, it requires a lot. Okay, let me retrace here. Proof of stake's main advantage to proof of work is, I think it comes down to the computing power needed to run proof of work. So as we know, like the electricity needed to run one of these mining machines to run proof of work is insane right now because it's so competitive. Everyone wants to mine these now. Proof of stake doesn't have any mining to begin with. The people, the nodes, the ones who verify the transactions are given to people who stake holdings of the coin. So in order for me to be a node and someone who runs the networks, who verifies the network, I need to put in my cryptocurrency. Like I need to stake the holdings I have in that cryptocurrency to be able to be a node to verify these transactions. So immediately, right, by doing that, you're not wasting all this electricity, all this computing power to verify the network. The people who are verifying the network are proven investors in the network. Like you have to hold a majority of this coin to be a stake, to hold a node. That's where you see master nodes are the same idea. Like there's minimums set by each currency on how much you need to stake before you can be a validator of that network. So generally, that's the two biggest differences between those two. I have to fill out the pros and cons here yet. There's a great article right here that I can go into that if you guys are more curious about that. So in the general sense, most of the sentiment in the crypto market is proof of work is the established consensus protocol. We know it works. It's been working. Bitcoin's been using it for almost 10 years now, 9 years, going on 9 years. And this we know is a proven consensus way to establish security, establish transparency. This is the proven blockchain method. Proof of stake is a newer implementation. We know that it's more scalable than, we know that it's more efficient than proof of work because you're not using all the electricity. And it also claims that it is more scalable than proof of stake. Proof of work. Proof of stake is more scalable than proof of work. There are claims that. But the downside to proof of stake is some people say it's not as secure as proof of work. So in proof of work, in order for the network to be compromised, you need to have over 51% of the hashing power of the network. So if you wanted to perform a malicious attack and you wanted to rewrite a block how it wasn't supposed to be written, you'd have to control the majority of the blockchain to do that. In proof of stake, I believe that number is only 33%. That comes down to the staking mechanisms of it, and that is a lot more complicated. That's what I'd love to do in a separate video just on that, proof of work versus proof of stake. But those are the basics of proof of work versus proof of stake. And then you get into more stuff like delegated proof of staking, which is more about voting and stuff. Proof of importance, proof of devotion. Those are two things I just discovered. Those are brand new. I would love to get into more of those. And then DAG, which is, that's crazy. That's IOTA's version of this. That's a completely new idea. That's just been written on paper and has not been proven. There's nothing backing that saying it could work, but it's an amazing idea nonetheless. And I'm really curious into that. So like I said, I'd like to make more episodes about this. I know some guys wanted me to go over a couple coins before this is over, so we can get into that. Jeff wanted me to get into NEO. I have yet to do my super in-depth, going all the way into NEO, but as I know it right now, and from what I do know, NEO is awesome. I like NEO a lot. They're using delegated Bayesian fault tolerance, which is, I believe, very similar to Bayesian fault tolerance is another consensus protocol. So what do I have written here? So basically, Byzantine agreement it drives on math. It becomes a mathematical formula on who's going to be the trusted actors of this network, who are going to be the ones that validate this network. I don't really know too much about designated Byzantine fault tolerance. I'm going to probably learn a lot about that when I do my NEO in-depth research. But yeah, back to NEO, that's how the consensus protocols work. So it looks like that's pretty interesting. It's different than all the other smart contract platforms, as you can see. So that may definitely give NEO some inherent advantages that I have yet to uncover. But yeah, NEO used to be formerly AntShares. It's a Chinese decentralized app platform, nonprofit, utilizing a smart economy. Also, I know NEO is big into they're going to want to definitely integrate. Yes, NEO pays you in gas. That's one of the great things about it. It's proof of stake at that point. So I think they have a hybrid here, proof of stake and designated Bayesian fault tolerant. So one of the main things they're trying to do here is also, I think what's really interesting is the digital identity. As we know, blockchains are a secure ledger and way for things to be to verify transactions in a way that doesn't require a central party. So one of the biggest applications of blockchain is putting digital identity onto it. having everyone's identity on this blockchain so you can be verified of who you are. You don't need a government to give you a piece of card, and you don't have to pay them for that. So the NEO platform is a smart contract platform like Ethereum, in the sense that you can build applications on top of it. Another key feature I've noted here is they support widely used coding languages like Java, C#. Ethereum's platform is only written in Haskell. So that is an entirely new smart contract language. So if you don't know that, you'd have to learn it in order to write a program on Ethereum. NEO supports other ones. What else we got here on this? So yeah, I think the digital identity is huge. It's basically a smart contract decentralized app form utilizing assets. So basically digitizing all kind of assets. NEO wants to be that platform to do that. As Jess was saying, NEO, there's two coins that exist with NEO and gas. If you hold NEO, you are rewarded with gas. That's part of the proof of stake protocol. Basically, that's the staking reward of holding NEO is you receive gas. I've been holding NEO for a while, and I have like I think a fifth of a gas token just by holding the NEO I'm holding. So yeah, utility token. NEO is used to pay for things on their contract platform, just like Ether is used to pay for things on the Ethereum blockchain. And holding NEO, incentivizing people to hold it, generates gas, which is then the gas on the network is used to pay the nodes who run the network. Exactly. So it is just by you don't even have to be a super node like these other proof of stake protocols where you have to hold a certain amount of NEO to be a validator. Just by holding any amount of NEO, you're going to receive gas. This incentivizes people to use this network. This was developed by Onchain and Dai Hongfei. Some of their partnerships, Da Hongfei, I'm sorry if I butchered that. Hyperledger, Legal Chain, Onchain, Microsoft China. So NEO has definitely been around for a while. Used to be known as N-shares. I'm pretty bullish on NEO. I like NEO a lot. It's been dubbed the Chinese Ethereum. Yeah, I'm definitely going to be going more into the Bayesian fault tolerance that they have, and looking more into like these digital smart assets, seeing how it differs itself from Ethereum, and these other smart contract platforms. But I do like NEO quite a bit. One more that I think you get, I didn't mention this, Switch.io. So NEO is launching their own decentralized exchange. So as we know, Binance is an exchange for cryptocurrencies. There's been a lot of movements now for people to launch their own decentralized exchanges. That is going to be, that's huge, because that's basically a transparent, decentralized marketplace for people to exchange their cryptos. Has not been done before. So the first company to implement that, I know there are some cryptocurrencies on here that are just going for that. So if NEO could do that on their own, it would almost eliminate the need for some of these other ones. Where are they? Yep, most of these ones right here, decentralized exchanges. I got a minute left, guys. So I know Jacob wanted me to give my opinion on Stellar. I love Stellar. I did an in-depth coin, and that was the first coin I did an in-depth call on for the crypto calls on Sundays, which I'll be doing every Sunday as in-depth calls. I was doing these crypto 101 calls every Tuesday. I might look to start doing them on Thursday if they're popular enough. But we'll click on Stellar Lumens. Stellar's awesome. That's a protocol for anyone to use payment services. IBM already uses it. That's big. That's big fucking news. IBM, sorry, excuse my language, but IBM, is a technological leader, and this is their blockchain choice. So that I think says a lot about Stellar. I know Jordan Morgan's very bullish on it as well. Stellar is one of my top cryptocurrencies. Thanks everyone for